traditional insurance channels are not changing fast enough. They're just running there and they're not adapting to this world. And that's what I see as the opportunity in embedded insurance. It is a combination of changing original products to fit this new digital age, meet customers where they're at.
Hi everyone, and welcome back to the Insect Podcast. This week we are talking to Root. It's only been a year since we had them last in our podcast, and there is a lot to catch up on, including the tech company's expansion from South Africa to the UK, appointing a new CEO, and their ever-growing focus on embedded insurance tools. As always, if you are interested in what we do, from podcasts to events, you can find out more about joining our membership at www.instech.co. Now back to Matthew.
Louw, great to have you back on the podcast. We always like to check in where people are. I know where you are, but for the benefit of anybody else, where in the world are you today?
Awesome. Yeah, hey Matthew, thanks for having me on the podcast again. So today I'm sitting in sunny Cape Town, wintry sunny Cape Town, and then I'm back in London again over the weekend.
Great. Benefit, of course, if you come from South Africa, you haven't got to worry about the time difference. And the good news is we've finally got some sun in the UK, so you can leave wintry Cape Town for sunny.
Yeah, I timed it accordingly. I waited for the weather forecast to show positive before booking my ticket.
So we had a chance to find out what you're doing with Root about this time last year, actually. And you've got some really good listeners for the last podcast. You've got to beat that. So over 1,000. Congratulations. You're now on the 1,000 Fans Award. So we're going to get an update. But for those who didn't catch us on that one, I don't know you so well, I'll give my brief overview as to what you're doing and then probably should give us a little bit more context around that. But you're a technology company. You are basically building the tools for MGAs and insurers to support various applications, but your particular niche area is around embedded. And one of the things we talked about last time I thought was really interesting is the nature of the companies you've been working with in South Africa is the sort of variety of insurance they choose to take on. So you've had to build a business that's quite agile in terms of what you're doing, and you've now been expanding into the UK. As my brief synopsis, have I missed anything in there critical?
No, I think that's spot on.
So yes, I guess today we're just going to catch up with what's been going on in the last 12 months. I know you've got a couple of bits of breaking news. What's the sort of most significant thing for you?
Yeah, in the last 12 months, we've made quite a lot of progress as a business. Like you said, we started the business in South Africa originally, tackled the problem of enabling what we deem the future of insurance would be. So that's largely an embedded or affinity or partner-based insurance distribution. And then about a year and a half ago, we started expanding our product offering into the UK market as a, call it next step for Root's journey. Now, what we discovered in our expansion to the UK was actually that in South Africa, we managed to solve quite a big problem well, that when we got to the UK, we realized our platform is way more mature than what the market might be used to or might be familiar with. And that was actually quite a good advantage for us. We were able to tackle quite a lot of different opportunities in the UK space, which other platforms or other, call it companies, can't go that broad, or they can't tackle the varying degrees of requirements people have in this embedded space. So what have we done in the UK since our chat last time? The changes we've made. One of them is we've hired a country manager in the UK, a pretty cool guy who's got in-depth experience in this space. And he took on the lead role for us in the UK to represent the brand there and help us build network and partnerships in the country. And then separately as well, another change we made, which was quite recent, only announced last week, which is we changed the CEO role in the company as well. So Charlotte Koop, who used to be my COO for the past 4 or so years, she took on the CEO role of the business to help us scale it more globally and push forward, while I focus more on driving where I'm good at my skills, which is like helping people solve the technical challenges on the ground, helping them actually coordinate and orchestrate solutions to the things that they're trying to solve. That's my happy space. So those are like two big changes that I would say have happened. Other than that, the platform's been just leveling up, stepping up. The scale is becoming quite incredible for us internally. It's surprising when you power other people's insurance businesses to just see them grow and see how they pick up volume. And you're just continuing processing and being that reliable platform behind that. So there's a lot of stuff behind the scenes that's quite cool.
I want to come back to your appointment of Charlotte in a few minutes, because that's a really interesting trend we're seeing on sort of founders who decide for various reasons to bring in or promote someone to CEO level. But I want to go back to actually that point where you made there right at the beginning, that when you came to the UK, you found that you were more mature, or you had a solution that's more mature than people were used to. I mean, that surprises me to some extent, because there's lots of businesses in the UK building policy administration systems, to some extent, I would kind of feel the UK is one of the most innovative areas, partly through Lloyd's, partly through the nature of how we buy insurance. So can you just talk a little bit more about what that means in practice?
Yeah. So this is very specifically for let's call it the niche market of partner-based distribution. So in summary, that is when an insurance organization, whether it's an MGA or a carrier, distributes their products through another brand that's got a captive customer base. That could be anything from a retailer to a bank, so your bank assurance will fall in that category, even to the likes of Ubers or Airbnb or even Amazon or like those other big brands. There's many of those brands in different categories out there. So that's where we play. What we found in South Africa, however, was that firstly the brands, these big distributing entities, they've got the power in the relationship because they have the customers. So the insurers are almost like secondary in that engagement. Typically that would be different, like when you're selling through price comparison sites or brokers. The broker, they've got their own dynamics there, but typically the carrier's got a lot of control or authority in the conversation. So that's changing in the UK. In South Africa, that has already changed. The affinity space is very mature, and you've got these big brands. We service quite a lot of them in South Africa. Think of your retailers, companies selling clothing or physical goods like furniture, electronics. These companies typically sell a wide range of products, and they sell insurance coupled to those products or not coupled to the products, but just targeted at the same customer base. And what we've learned with them was because they've got a captive customer base, they need to provide the products that are most relevant to the customers. They can't just go offer home content cover. It might be completely irrelevant to the type of product they're selling. They might need to sell a device insurance cover that's very tailored to the types of devices they sell, or even in the environment that they sell it. And that requires a lot of nuance in the products, in the configuration, in the way it's integrated into their systems, their user journeys. The product itself, from an actuarial risk underwriting point of view, could be quite simple. The way you execute that is quite complex from a technical point of view. And we had to solve for that in South Africa. Like one of our clients here, the Foschini Group, massive retail group, they've got a few dozen brands underneath them, like different retail brands in the typical malls and stores that you see. And they sell varying types of insurance through all of those brands. So they run literally dozens of different insurance products on our platform because they need to target those different customer profiles in the market. And what we had to do is make sure we can solve for all of that. We had to make sure we're flexible enough, we've got the right tools, we make it easy and fast to do that. Coming to the UK, bringing this back, this one brand selling many different products to the UK, is the UK is still driven by MGAs or insurers that offer singular types of products, typically in the traditional way that they've been doing it. Bringing that to a big brand or a big partner, suddenly you need to think differently because the product might not be relevant. The brand might want to sell different products that the carrier themselves don't provide. They only provide, let's say, motor insurance. Now they want to also add travel insurance or pet insurance or some other thing. And suddenly a lot of things are falling flat in the ecosystem. The carriers and the MGAs are typically not always geared for that. Some of them are quite good at it. Technology partners are not geared for that because they've maybe built an excellent pet insurance system. But now suddenly you need to manage pet and travel and device insurance to keep it like basic or simple now. And then the systems start falling flat because you can't manage all of those things. And that's where our maturity came, is we had to solve those things already, run it at scale across millions of policies, and bringing that to the UK, it just works out of the box.
Yeah, no, that's a really helpful explanation and makes a lot of sense. You reminded me just along the way, because I've stolen your quote quite a lot about how often you have to make things really complicated in the back end to actually make them really simple at the front end. And that's very clear there, particularly because I guess you've got those different parties in the process. And just the other thing more broadly around embedded, I mean, there's a lot of interest in embedded, although the concept of embedded has actually been around for decades. But in the last probably 3-4 years ago, and then more recently, it seems to have, in the UK anyway, it seems to have died down a bit. Is that, do you think, because some of the complexities? So people, they got it, but the barriers to actually deployment, whether it's the technology, is it the retailers and the partnerships? What are you seeing? You're seeing on the ground success because you've got a proven solution. But generally, how do you sort of characterize the market in the UK when you come and look at it from the outside?
I would say the name embedded is probably a word or a name that will blow over. And then in 5 years' time, there'll be this new name or new word that people use for it. Affinity insurance, that pretty much a lot of embedded insurance, or a lot of affinity insurance, which is an old concept, is actually just embedded insurance. But it doesn't look funky or cool or modern necessarily, and therefore people they dismiss it as not being embedded. My macro perception of what's happening in insurance is insurance has traditionally been distributed through a fixed set of distribution channels. So that would be typically your brokers. I'm talking more like personal lines type of insurance, not your big, heavy Lloyd's underwritten commercial insurance type things. You're looking in the UK at price comparison sites that sell products in mass. And then you also look at call centers that just do outbound sales. And that varies per country that you're operating in, which one is more prominent than the other one. Those are like the primary distribution channels. However, what's happening in the world is those channels are being saturated. So consumers and people are getting over it. Like, when last have you answered a phone call or actually bought insurance from a cold call? That doesn't happen these days. It did happen a few decades ago quite well. So those things are not working well anymore for new sales of policies. And then at the same time, you have consumers changing their behavior fundamentally. So the internet, I'm calling it the internet age, is changing how people do things. It changes the tools they use. It changes how they communicate with friends and family. It changes where they live. Like, how many people now lives in the city of, or near the city of London to go to work? Most people in the city of London actually lives an hour's train ride away. So that means your usage of your car is different. Your usage of your home is different. The risk of stuff getting stolen in your house is probably less because you're there most of the time. Now, the traditional insurance channels are not changing fast enough. They're just running there and they're not adapting to this world. And that's what I see as the opportunity in embedded insurance. It is a combination of changing original products to fit this new digital age, meet customers where they're at, which largely through brands is becoming a big thing. And then at the same time, it's also this thing which I think is completely undiscovered still, or at least not talked about enough, is new types of insurance products that are starting to come to life. Because you have new types of engagement models, you've got new types of data from consumers or users or customers. You've got new ways to price risk with that. So you don't have to ask the typical 60 different questions to do a motor insurance quote. If you're a subscription platform that controls the vehicle with some IoT device, you can probably look at risk quite differently. So all of those things are happening. So I think embedded insurance as a theme of affinity insurance it'll stay there, and I think it'll just grow bigger and bigger. Even though people might not call it embedded. They might not think it's the funky, cool travel insurance when you buy your airplane ticket, which is like an obvious one.
It's like the old saying, someone who called his Spain affinity insurance embedded. It's been around for a long time. It works. The other piece that I see evolving is there's more interest in homogenous commoditized insurance, say for our properties. And then we go out and buy separate insurance, to your point, like travel, or we've got an expensive bike. And I don't think this has really evolved there yet, frankly, where we're not using our car very often. That's, to me, where the power of this becomes. It doesn't replace the core insurance. The core insurance ideally would go down because it shouldn't be taking into account all the pieces that they're going to, where the insurers lose money because they're insuring someone's expensive bicycle or something. And ideally, from a consumer's choice, you got choice. So I'm kind of encouraged about it, although from a personal buying point of view, I haven't yet see it make a difference. As I go out to look for insurance for our family, I don't quite see that coming through, but I'm encouraged. I've actually been encouraged now. Root's coming to the UK, and you've created that final mile. You solved the final mile problem, Louw, because you've actually made it easier to do all of these complicated pieces.
Yeah, I think we need to give it some time. Like, with the right building blocks and tools in the environment, innovation will pick up. So thinking of the type of cover you have for your family, I do think comprehensive home insurance is a pretty useful thing. It also helps with cross-subsidizing the different benefits, so you don't pay as much than when you pay for individual benefits separately. But then there are times when that doesn't make sense. So let's say you're traveling and you're renting a bike from a bike shop somewhere. Like, that's a thing that you just want to have cover right there, very context aware to the environment you're in.
Let's come back to the business. So you talked about interesting two people things. So Alex here in London, we've seen quite a lot of Alex around beforehand. So great to see that he's connected up with you. And then Charlotte. So yeah, I always think it's a great move. And we've seen quite a few companies be successful in this way. Cat Risk recently, Fathom, both of them have got founders that either brought in an external CEO or promoted somebody internally. You're the developer, Jonathan's the former banker. And you actually said to me before we spoke that Charlotte had also been quite successful in growing the business side. It's great to hear a little bit more about the thought process, because you're offering quite a lot of responsibility to somebody, very different role to be the person that's running the business versus the person that's got a functional role, operational role. And I guess I'm sure it's working out well, but it'd be good to know some lessons for anybody else who's in your role as a founder. What's your advice to somebody else who's in that situation and just wants to get on with what they really enjoy and is thinking about how should they pass on the run? I mean, it's interesting because you're running the company, but ultimately you're still the shareholder. So ultimately, the CEO might be your boss, but actually you're the CEO's boss because you're the shareholder. But so what advice, recommendations to people as they're thinking about that?
Can I start this by caveating that we're 1 week in on the change? So a lot of my data and learnings and feedback I can give is very fresh and might be out of date in a month's time from now. I would say one thing is I've been working with Charlotte for, I think it's 5 years. I think she started getting involved in 2018. So we've built up quite a strong trust relationship over the years. And before she even were in Root as a business, she was at one of our, call it shareholding companies, helping me directly as well, spending a lot of time on Root. So we were working together, solving really hard problems, literally on a weekly basis. So that's quite an important thing that you can't hire from the outside in. You can't find someone on the outside unless you've worked with them before in some other previous business or something. So I don't really have advice for someone who does not have someone in their business that they've got a very strong working relationship with. Then at the same time, for me, also what I found is I'm an engineer, software engineer. I've been building stuff, been building companies my whole life. So Root's only my third company, I'd say, that I've been building. Definitely the most successful or biggest one if I had to measure it by revenue or whatever. But that's where I'm good at. So I'm good at applying tech in the world, solving really hard problems with that. And that's my happy space where I flourish and create good value. Where Root is now as a company is it's been growing really well and it's been growing into quite a mature business. So as a business, we service big enterprise clients, we service big insurance companies. And with that comes a certain level of responsibility in running a company like this. It's not a startup. It's not a small tech company that can just run around and do random things. We need someone who's very focused and good at that to drive that forward. And those things are not always correlated with building cool things and helping solve technical challenges. So I can't do both at the same time is basically what I got down to. So either I spend time in the market helping people solve the embedded insurance type of problems, because it is still an incredibly hard problem, even though our platform makes it a hell of a lot easier, or I don't do that and I spend time building and scaling the business. So given that Charlotte and I have been working closely together, we at some point decided, let's do that switch. Let's switch it out. Let her take the reign and let me focus on this other part. At the same time, she also has been, for the last year or so, she's been running the business with me. So it's not actually the handover in this process. There was actually no handover happening because she's already involved in all the CEO responsibilities and things. So it actually set us up reasonably well. Okay, that's a bit of history on us. So I would say for other people looking at making a similar thing, I think the comments I would have is focus on what you're good at, because ultimately it's about the business needing to win, our clients needing to win. Those are the things that matter. There's no point for ego in any of this. If you're not good at it, find someone better to do it. Doesn't matter if it's sales or marketing or engineering or running the company. Get the best people to do the job. And the second one is build strong relationships with the people that you put into those roles. I don't think you'll have success if you hire someone cold off the street to come do this.
Yeah, that whole point about getting to know people. And I guess the third point, and this may or may not be relevant for you at some point, I'm sure it is, because people usually found companies at some point to make an exit. But it's an easier position when you've got an external investor or an acquirer coming in if you've built your team around you so it doesn't all fall back on the founders as well. That's another sort of good reason for doing it at the right time. But you often know in the first week whether things are going to work out. I think that's a pretty good sign. And as you said, you knew each other pretty well before. So that's excellent. The other thing, actually, we talked about this last year when you were talking about writing code and having not touched code for about 30 years and never very good at it in the first place. But what I found fascinating about going back to just remind myself what it is to write code and dabbling with Python and using ChatGPT is how much it teaches you to be rigorous in your thinking and your planning. You can fake it up to a point, and you can fake it a lot more with ChatGPT. But to me, it a little bit links back to your point about how do you run a company or how do you build product. You know this very well. The best engineers are those that are actually just very rigorous in how they write code, and that just, to me, I find that just translates into so much broader thinking than just writing the code itself. Has that been your experience in taking your happy places and extrapolating into other parts of your life?
I do think so, and maybe it's a personality thing, and the personality attaches to software and development because it aligns. But I do think writing code teaches you a way of thinking structurally, systematically, that translates to pretty much everything else that you do in life. And I think that's a very useful tool, or skill rather, to have, definitely in company building. The company is basically a big program that's running with a sub-program called our platform in the middle of it. But I think it plays a big role. If you read up on people like Jeff Bezos and how he structured the culture in Amazon and stuff, it's very aligned to that as well. How you think of APIs between teams, sub-organizations, and the humans in that. But then you have to add the human element to it as well, which I think you don't get in your computer. maybe with ChatGPT you get some human element to it with the hallucination, but in the real life you've got people.
Hey, let's talk a little bit about your clients. I know Admiral is one company you're working with that is public knowledge, well-known, fairly recent insurance company, quite innovative. It'd be great to hear a little bit more about what you're actually doing with them.
Yeah, so Admiral's doing some pretty cool stuff. Now, obviously, I'm assuming everybody listening to this call knows Admiral, the big motor insurance company in the UK. We are working with their pioneer team, which is building out Connect by Admiral, which is essentially Admiral embracing this embedded environment that we just discussed earlier, where big brands are looking at selling insurance. They're looking at offering insurance that are tailored and unique and fits to their customer journey or the customer experience that they're going through, whatever that is. And that's what Connect is trying to solve for. They're basically trying to make it really easy for these brands, big companies or platforms that have this captive customer base to make insurance part of that journey. And then obviously leveraging Admiral's trust and credibility and all of those things, obviously balance sheet, to power and fuel that in the market. It's been going quite well. There's a bunch of projects on the go there. It's really exciting because for us, that's our happy space as well as a business, is partnering up with prominent brands, or in this case, prominent insurers who embrace this same challenge in the market. So we're like very complementary in that space. The primary products they've been selling up to date, the ones that are public, is this one where it's like essentially subscription vehicle insurance. And on the topic of consumer behavior in the world changing, a lot of consumers or a lot of people in the world are reverting to not actually buying vehicles, but rather leasing vehicles. A long-term vehicle. It's all like rent and don't own type of behavior shift. I think the same thing holds in houses and renting places instead of buying places in like newer generations. For that though, insurance is not very well geared. So the current user journey on most subscription platforms is you go through this thing, they give you a quote, they say, cool, you can rent whatever vehicle. Let's say it's some BMW 3 Series. And then they say, okay, please go find the insurance and phone us when you've got it. So then you're on your own. You as a customer need to go on some comparison site, apply for a few quotes, but often at that stage you don't even know the car's like serial number or even the specific details of the make. It might be 3 Series, that the literage or whatever could be different, the engine size could be different. You don't know those things. Now you need to go get a quote on a comparison site, you get the quote, you get the vehicle, the quote doesn't match the vehicle, you need to go get a new quote. That's a lot of effort. There's a lot of pain. That's not good for the consumer. It's definitely not good for the subscription platform trying to get the vehicle out there. And these subscription platforms includes the OEMs themselves who lease vehicles directly. So the product Connect has is basically a subscription vehicle product that these platforms can embed and make part of the journey, so that when a customer is busy on the checkout journey, busy applying for that vehicle, that it gives them a quote, they can actually execute and bind the policy pretty much in that journey. And if there are any changes in the vehicle, because the OEM or the provider of the vehicle rather decided that they're going to release a different model than the one you subscribe to, then the insurance can automatically follow suit and update relative to the different vehicle you're getting.
You slipped in an acronym there, OEM, which is Original Equipment Manufacturer. So for those that don't understand that, it's essentially most often used, I think, in the automotive world. It's the original provider of the product of the vehicles that might be being distributed or sold through a third party. Louw, you had earlier on, right at the beginning, you mentioned about the fact that what you're doing allows you to get a little bit more flexible or provide insurance for some different assets. Can we talk a little bit about the shift of companies' assets from physical assets to intangible assets? And that's also starting to be an area people are looking at with generative AI, and you talked about hallucinations, but some of the issues you could have using generative AI. Is that an area you're looking at, into those sort of intangible areas, and any examples that you can talk about of what you're doing in that space?
Yeah, ultimately our clients doing the interesting things and the call it the players in the market. So where we come in with that is like our view on enabling insurance, enabling this wave or transition or evolution rather is the word of insurance, is we need to make sure we've got the right building blocks that make those type of things easy, like these different types of products and things that people are now starting to experiment with or trying out in the market. So our view is we can't be opinionated. Most other platforms are opinionated. We can only be opinionated on the tools we build, and the tools need to be like flexible and robust and reliable to do that. What we do see in the market that's pretty cool, you asked specifically intangible assets. We haven't touched the gaming industry yet. I think there'll be a huge market there. Maybe cyber insurance and stuff steps in there. Companies like CFC, they do really cool things. They've recently launched a product where you've essentially got M&A marketplaces, so mergers and acquisitions, where people sell businesses online, that some of them have existed for a few years now, but only somewhat recent, where you are able to buy and sell digital assets. So things like websites or domain names or some other digital thing it's too small to get an investment banker involved to help with the transaction, but it's also big enough to have like real value that makes it worth doing a transaction. So these marketplaces, one of them is flipper.com, and another one would be acquire.com. It's a whole bunch of these marketplaces. What they do is they make it easier to have a buyer and seller community that can like do transactions on these products. What that has basically created is an environment where you can offer transaction insurance for these type of acquisition transactions that were not possible before. So historically, if you're selling a business, it's very cumbersome to get a broker or someone involved to do heavy underwriting for the transaction that's happening, both for the buyer, like they're scared that the seller like are cheating them in some way, or the seller who's scared of like fraud, or the buyer running away and wasting their time and those type of things. Because of these digital platforms that make these transactions a lot more seamless, there's an opportunity for insurance to tie into that and cover the risks involved in those transactions. The underwriting is a lot easier. Because it's digital, the processes are mostly facilitated through, the transactions are facilitated through this technology platform. And the risks are also better understood because there's like a good volume of it flowing through. So what CFC has done is they've built two products, a buyer and a seller product for these transactions. They posted, they partnered with flipper.com to power or offer insurance on those transactions. For me, that's quite cool. That's like the greenfield type of insurance that's starting to happen. And those things can only start happening because technology makes it possible, and because the right technology makes it possible. And I'm really hoping to see more of that coming up, creeping up in the market, and then people will better understand what embedded really is capable of doing.
Yeah, there's a massive capacity out there. And as you're talking, I'm just thinking, it reminds me actually, and you're a software guy, so you might know the answer to this. Whatever happened to NFTs, non-fungible tokens, the idea that you could pay for your CyberMonkey, whatever it would have been, digital asset. You're close to that world now. I mean, does that still exist anymore? Because people lost loads of money on that.
I don't know. My crypto kitty is only worth 2 quid now, so I don't know. I've written it off. Stopped looking. I have a sense that those things mostly were tied to like hype train, a lot of hype in the market. I think the hype has shifted quite a lot towards AI now, like the same crowd that jumped on that bandwagon's on the AI bandwagon. So there's a lot of noise in the AI space now. There's like really important, useful things happening, and then there's 99% of it is hype noise.
Really? I'm a little bit more optimistic. There is a lot of hype out there, and I think that there's a risk with generative AI. You can try, and I've felt guilty of this, think it can do everything straight away. It just takes time. But I was talking to somebody the other day, and I benefit of being around for a while is, to me, generative AI feels a little bit like, if I go back to the start of my career, I started off catastrophe modeling. 10 years later, it was the internet. 10 years later, it was iPads, iPods, iPhones. And now I think generative AI, I'm a little bit more optimistic. Although just talking about things for insurance, I don't know if you've got anybody in this space, but I've just coined live a new term, which is angry AI, because Munich Re were writing about this, the risk that your AI goes mad. And I actually was talking to somebody the other day that had one of these robotic cleaners. What happens if a robotic cleaner goes crazy and starts smashing up your house? Do you get insurance for that? So look out for it. I don't know if you've got any clients, though, that are interested in insuring angry AI, but I bet that's going to happen at some point.
I think we have some insurers that might be interested in underwriting things like that. They're just looking for the right distributor to go push it into the market.
Well, wait until this first robot goes mad and starts destroying things.
I think we'll get to that point that you're describing pretty soon.
I guess we're off on a whole different channel. Probably should be a different podcast, the future of robots. But they've been around for a long time, and maybe just going to start to evolve. But anyway, let's ground ourselves back in the reality. What should we be looking out for in the next 12 months? So when we talk again next year, we can check in on how you're doing.
Yeah, I think it's a good question. So our focus is pretty much still, as it's been, is focus on the UK market. Like, we think there's huge potential in this space. We are definitely seeing people are figuring out, like in this embedded and partner-based insurance, coming to grips with what it means to deliver those products, the orchestration of the different partners and providers that you need to get involved. So that's where we're focusing. So we're basically the rails underpinning that and making it possible for someone who wants to now suddenly or recently decided they want to start selling insurance through some other big partner brand that they've connected up to. We underpin that and we pull in and help them pull in the right partners. Maybe they need someone specializing on claims for their specific type of product and those things. I think that's happening a lot more now. And for us, that's really exciting because that's our sweet spot, is enabling that. So I think basically just keep eyes on the stuff we're doing there. And also if anybody's in the market trying to figure out how to leverage partner-based distribution, or even trying to just plug insurance into their product offering, like we're definitely around to help, even just to make introductions if that's useful for them, so that we can get this shift, this evolution in this space going.
And actually, that comment about Rails, you just got me thinking. So I've heard Rails most frequently referred to in terms of payment rails. But I think it's a great analogy because I'm going to go off on a tangent here, but we're seeing a lot of development in platform. It's interesting, the railway analogy, but platform is by definition static, whereas Rails enable movement. So when you say Rails, are you intentionally using that as a facilitator to movement versus a platform, which can help be the connecting point, but is somewhat more static? Is that intentional choice of language?
Yeah, it definitely is intentional. So it's essentially the way we see it is we play a catalyst role. So to use your words of movement now, like when there's movement, when there's change, that's positive. So I do see the industry somewhat as static and stagnant in a lot of senses. So there needs some movement to happen in the space. And that's why we call it Rails. It's like enabling products to get going. It's enabling plugging into partners to get going. It's enabling policies to get written and sold, premiums to flow, claims to happen more seamlessly and more automated. So there's a bit of facilitation role that the platform ultimately plays. So we do use the word interchangeably, but Rails is like the way we would describe almost like the action that it achieves.
That's why I love doing these podcasts, because I need to hand in my homework for this week's article, and you've just given me my title. Are you the Rails or are you the platform? So it's almost going to write itself. So thank you for that. And then finally, for anybody that wants to know more about what you're doing, what's the best way to contact you collectively as Root?
If you want to get in touch with us, there's multiple ways. One is you can apply on our website, but I'd say just drop me a message on LinkedIn. You'll find me, Louw Hopley, on LinkedIn, or Alex Stengo as well, who looks after our UK market. Give us a shout on LinkedIn and we'll be quite responsive and happy to chat.
Great. And we'll put some links in the episode notes. And of course, you can always come through that. And then finally, we're very delighted to have your support. An organization like yours, a growing business, you always think very carefully how you spend your money. We'd love just to know what it was about what we're doing at Instech that encouraged you and Charlotte and Jonathan to keep going with us another year.
I would say it's almost to my comment on AI, which, by the way, I'm optimistic on AI. I'm not negative about it. It's about filtering signal through noise. And I think Instech is like generally a high quality partner that provides high quality credibility in the market, which is what matters for us. Like we're all about referenceability and networking in the space, and Instech does a really great job at that.
No, that's great. That was unprompted. So thank you. It comes straight from the heart when you don't prep them for that question. I really enjoyed that. And we had a chance to go a little bit off the rails, back on the rails again. But thank you for your support, and look forward to, I think I'm going to see you in the UK this time, but do please keep in contact, because we're doing so many events now, including, thanks to Google, a great event last week for founders. Yeah, we'll get you on stage and see you face to face in the sun, hopefully.
Cool.
Safe travels this week. Okay, thanks.
Awesome. Thanks, Matthew.
And that's all from us this time. See you next Sunday.